Hello and welcome to our discussion on accounting equation. Here we would like to just examine two items, credit sales and cash sales, and its impact on the accounting equation. And for that we'll take a small example. We have already an accounting equation which shows capital 500,000, bonds 200,000, cash of 700,000, and with this cash they purchase a stock of 80,000, so cash has come down to 620,000. Now this stock, if the entire stock is sold for cash, what will happen to the equation? If the entire stock sold on credit for 200,000, what will happen to the equation? Let us see if the stock is sold for cash. If the stock is sold for the cash, stock will become zero because entire stock is out. And since it is the sales is for cash, so therefore cash will increase to the extent of the 200,000. No change in the capital, no change in the bonds, but there is a profit of 200,000 minus the cost of the stock. So therefore cash sales affects the equation by increasing the cash, decreasing the stock, and the resultant figure, sales minus the cost of goods sold, is the profit. Now let us see if the same stock is sold on credit of 200,000. In this case also stock will become zero because we sold the entire stock on credit. But since this is on credit, you are not going to get any cash, so the cash will remain the same, 620,000. However, because of the accrual concept, we record this transaction, and since this money is going to be received in the future, this is an asset, and we give a name to that asset called debtor, or in some cases receivables. So debtor is an asset because we collect money, we expect the debtor will pay us money in future. So anything receivable in future is an asset. No change in the capital, no change in the bond, and there is a profit of 200,000 minus 80,000, same. So we can see that whether the goods are sold for cash or goods are sold on credit, all other things remaining constant, the profit will be same. All other things remaining constant, the stock will reduce to the extent of the cost of the goods sold. But the difference is, in case of cash sales, cash increases. In case of credit sales, a debtor or receivable will appear on the asset side of the balance sheet. So cash sales and credit sales are required to be recorded because of the accrual principle. Credit sales results in a creation of debtors and asset, and cash sales results in increase in the cash during that period. Thank you very much.